All right, good evening, everybody. I trust you are well. We finally made it to the end of the week. It is Friday. It is October 21st, 2022. And boy, do we have a lot to talk about today. It was a broad-based rally day on Wall Street with the S&P 500, the Dow Jones Industrial Average, and the NASDAQ closing markedly higher for the day and for the week. Now, after the market closed, I was very curious to see if this was going to qualify for a follow-through day. And now that we have all of the volume data, it is official. We do have a follow-through day on the S&P 500 and the Dow Jones Industrial Average. So it looks like we will have to be testing the waters all but safely and surely there. So we'll talk about that. Also, we heard from one of the Fed presidents, San Francisco Fed President Mary Daly, as she said, the central bank should avoid putting the economy into a quote-unquote forced downturn or unforced downturn, to use her words. And she said that we should potentially think about starting to slow the pace of these interest rate hikes by the Federal Reserve. So maybe a little bit of Fed pivot there, but I don't think that we could draw conclusions based upon what one Fed President Daly has said. We'll talk about the bond market a little bit. Now, something interesting about that 10-year US Treasury yield. So if you guys look on like a tradingview.com or any sort of charting service that you use, check out the price action today in that US 10-year Treasury yield. Now, even though we closed at about 4.221%, we're down off the highs quite a bit. And it looks like we have, I'm not super big into the candlestick charting, but it seems as if we have one of those doji tops. So could this potentially be a short-term top in treasury yields and bond yields? Well, I don't know. We'll talk about it. And I think this could be a potential short-term, at least tradable rally for all the major indices. That's pretty much about it. Let's see who we have in the chat, and we will get started on the live stream. So let me put away my computer. But I see Alfred is here, one and only Chris Beeman, Tone Rick. Welcome, everybody. Just gonna pack up my laptop and then we will be on our way. All right, team, we are ready to rock. Let's see. We have Calvin is here, the one and only Dusty Cole. Good to see you, Dusty. Happy Friday. Fabio, welcome. Well, I hope everybody had a good week. It's been a busy one. I mean, I'm tired, to be honest. I'm tired from this week. But the good news, it is the weekend, so we have a little bit of time to relax. And happy Friday to everybody in the chat. Photos around New York says, Tom, I'm skipping my workout tonight. No way. Lainey James is here, says, hey, happy Friday, everybody. Good to see you. Hopefully we don't go out. Usually we have a little bit of internet issues in the elevator, but we'll see. We'll see. Good to see you, Paul. I see Destructionist. Good to see everybody. All right, so we're going to be exiting on 57th Street. This is going to be 6th Avenue. Yeah, the LT Prods is 15-year highs in bond yields. All right, so this is West 57th Street and 6th Avenue. I was working out of the 57th Street WeWork today. I haven't been working up here lately, but it's always nice to sort of make it back to the old stomping grounds. Now, before we get started, if you see this building right here with the gold top, now during the pandemic, that was actually my old building, because when everybody was moving out of the city, I scored a really nice place. So I got a pretty good deal on rent. Tons of traffic, everybody. seem to be working out of the city today. Now, I usually notice that Tuesdays and Thursdays are the big days when everybody comes into the office. But I'm not gonna lie, the city was absolutely packed today. I was here in the city doing some meetings. My office was packed. The entire Midtown Manhattan was packed. And it seems as if traffic is really backed up here on 57th Street as well. But let's see who we have in the chat. I forgot to say hello to everybody. I see the one and only Vinny Castellano. The LT Prod is here. Austin City Limits. China is here. The one and only NNB 045. Welcome. Good to see you from Canada. Lilla, Chris Beeman, Rocket, RS. Toast is here. The one and only British Gray from Tampa, Florida. Good to see everybody. RJ. Now, does anybody notice? Hey, Myra King is here. Good to see you. Did anybody notice the music that was playing at the beginning of the live stream? Let's check out some of this beautiful artwork right here. This is right at the entrance of 157, which doubles as the hotel, the Park Hyatt Hotel, I would say. But does anybody notice the music that was playing at the beginning of the live stream? Yeah, it was 80s music, but it was actually well, I would say one of the many songs that was a part of the Wall Street movie. Does anybody remember that old movie with Gordon Gekko? Abdullah, what's up? Good to see you. Now, we finally got our follow-through day in this market, and I think it really came close. But after the market closed, usually right around 7 o'clock p.m. Eastern time, is when we get the official volume data on all the exchanges. So I believe this was the 5th day of the official rally attempt off the lows. And a follow-through day is if the market closes above a previous swing high on greater than normal volume, that will qualify for a follow-through day. Now, I believe we got one on the S&P 500 and on the Dow Jones Industrial Average. I'm not sure about the NASDAQ, but this is progress. However, next week is really going to be a make or break week on Wall Street. Next week is going to be a week of action-packed earnings. We're going to be hearing from Apple, Alphabet, ticker symbol GOOGL. We're also going to be hearing from Microsoft and Apple. So we'll be talking about that. Hey, Linda Silva is here. Welcome. Dan Zhang says, hey, Tom, good day in the market. Yeah, Dan. So we did have a follow-through day today, which is good. I'm going to make a right here to get away from this guy. And, yeah, so it looks like on Monday I'll probably have to be testing the waters. Now, the only position, I usually don't like disclosing positions in my actively managed account, but I bought a little bit of XLE as it broke out over that swing high at 85. Very small position, but I have a position nonetheless. So pretty much in my actively managed account, almost all my equity exposure is energy. So we'll see. We'll break it down more on Sunday when we do the Markets Look Ahead live stream. But right now, this is West 58th Street. And right across the street is the very famous New York Athletic Club. Dusty Cole, welcome. Good to see you. Jamie Massetti. Robert. Dan says, when you headed back to Miami, New York weather is getting less and less friendly to your outdoor streaming. It's not that bad of a day out today. Well, we should be back in Miami maybe November 1st. So I think I said I'm renting out my entire place for the month of October. So from October 1st to October 31st, my entire place is rented. Now, I think I explained I'm going to be changing up my, I guess, short-term rental strategy, if you could call it that. because the same amount of time, the same amount of effort and energy to rent the place for maybe 1 or 2 days at a time, it's the same amount of time, effort, and energy that goes into, 30-day plus rentals. So I'd rather do that. And also, what I've noticed is that it tends to attract a very different type of tenant for 30-day plus rentals. They tend to be a little bit more responsible, maybe families, things like that, at least from my experience. Robert says, I thought you rented it out for the entire year. Yeah, not the entire year. Not the entire year. I don't think I'm open to doing that yet. I think on like a 30-day to 60-day rental term period, I can command a lot higher rents, right? I can command really, really high rents, targeted towards either working professionals that are allowed to work remote, maybe 1 month out of the year, something like that, or vacations. Because the distance, my property is about equidistant between Miami International Airport and Fort Lauderdale. So it's in a very good location. You know what? Let's go to Columbus Circle first, then we'll loop around. And it's a little bit close to the water. And when I say a little bit close, I mean if you jump on the trolley, we have trolleys down there. 10 minutes, probably 10 minutes to Sunny Isles Beach about. So not too bad. Not too bad. Hey, the Papa Smurf OG is here, the FDNY. Good to see you. Happy Friday to everybody. I trust you're well. So I think we could potentially have a tradable low in. Now, is this the low of the market? I don't think so. I'm not too sure, but I think we have to respect the market action, and today was a follow-through day. Okay, we closed at almost the dead high across the board in the major equity indices. Now, does anybody remember from Tuesday's live stream when we were talking about technical levels of this market? And I said, if this market was going to rally, I think it's very important and also appropriate to look at two specific key levels. And that is number one, the 50-day, and number two, the 200-day moving average. Now, if you look at the Dow Jones Industrial Average, the 50-day moving average is right at 31,082. You know what level we're at right now? 3182 or 31,082. So the Dow has already managed to rally back to its 50-day. Now, will it be turned away by that declining 50 days is yet to be seen. I think we'll figure that out next week, because we have pretty much all the companies that matter are reporting earnings next week. Now, maybe that's a little bit too harsh to say, but you think about Apple, Microsoft, Alphabet, Meta, I think is reporting as well. All the heavy hitters that make up a large portion of these indices are going to be reporting earnings. So, if we have earnings beats or even meet expectations on Wall Street, I think this rally could potentially have legs here. So I'll give you the two other key levels on the S&P and on the NASDAQ, because the S&P and the NASDAQ, the price action is still a little bit further away to reach the 50-day moving average. But real quick, right here we are in Columbus Circle. If you look all the way into the distance, this is the Trump International Hotel and Tower. So on one side you have the 5-star hotel, and on the right side you have the residences, which I think shares all of the amenities with the condominiums as well. Speaking of Wall Street, right in front of us, this is the Deutsche Bank Tower, formerly known as the Time Warner Centers. This also has a very, very nice hotel on these two buildings. Now on the, I think it's the right side. So the right side is the Mandarin Oriental Hotel, which is a very, very expensive 5-star hotel. If you guys remember back to the Miami live streams in Brickell Key, they also have an additional location there. DA is here, says, hey Tom, happy Friday. Thank you, DA. Happy Friday to you as well. Jonathan Richards says, hello, Tom. Hope you had a productive week. I did have a productive week, but it was busy. I was shot. I'm shot from this week. Not gonna lie. But the good news is the deal flow is starting to pick up. Now, I'll give you guys a little piece of anecdotal data here, and I think it's important, and this will sort of tie into the financial markets as well. Because if you think about being in sales, right, or a seller, and selling into the enterprise space, okay? So in an organization, you usually have an SMB seller, which stands for small to medium-sized business. Then you have your mid-market, right? So middle market companies. And then you have your enterprise, which could sell into Fortune 500, Global 2000 clientele and the like. So one of the things that I'm seeing right now, because for those of you who are in enterprise level sales, or maybe you are C-level executive at a company or something like that in procurement, this is right around the time where you are finalizing the budgets for the next fiscal year. Does that make sense? So all of the technology spend, all of the HR spend, all of those budgets generally are finalized now, going into Q4 for the next fiscal year 2023. So here's what I'm seeing. So out of my clientele, the vast majority of my clients that are holding strong as it relates to technology spend or IT spend, let me just give you guys a better full-on shot of the front of the building. Yeah, so I think I got that right. So the middle section is the hotel. The right is the residences, and then this is a 5-star, no, I'm not sure. It's a Michelin, I think it has a couple Michelin stars, this restaurant, in the bottom of the hotel. But back to what I was saying is, out of all the clients I work with, it seems as if whoever is in the healthcare space, whether they own a major hospital chain, nursing homes, assisted living facilities, home healthcare agencies, those particular organizations, I've actually seen their budgets for IT spend actually hold steady and grow for next fiscal year. Other parts of the economy, such as construction, I work with one of the home builders, I won't say which one. Those budgets are declining. But granted, I'd say about 80% of my book, right, I call it a book of business, deals in healthcare. And it seems as if a lot of the hospitals, assisted living facilities, home healthcare agencies have actually increased or is continuing to hold their IT spend steady for the next fiscal year, which is good news. But I am hearing rumblings from other departments or other friends who do work at software companies that are selling maybe into the banks or something like that, or selling into big consulting firms that are not saying the same. There's big cost reductions across the board there. Anybody noticing the same thing? You know, I think that's good to bring that up and talk about as well. Anybody in the chat, maybe you are, tasked with making the budget for next year. Maybe you're part of that conversation. What are you guys seeing in your neck of the woods as it relates to budgets for next year? So really quick, this building, very famous. It's called 15 Central Park West. And many, many famous bankers have lived here. I believe the former CEO of Goldman Sachs may still have a unit in this particular apartment building. Also, I think Alex Rodriguez and also Derek Jeter also formerly had residences here. Robert says, hey Tom, have you ever live streamed from Riverside Boulevard? Yeah, we used to. Now, we usually do that in the summer when it's light out a little bit, but when it gets too dark, over there, it's can't really see too much. But yeah, I really, really like Riverside a lot. Hey, Iris Lewis here. Says, good evening, Tom. Good to see you, Iris. Thank you for joining. Trust you're well. DWG says 25% down. James Simmons says hello from Ripley, Tennessee. A lot of viewers from Tennessee. Good to see you guys. Julia M says, hola, Tom and fam. Good to see you. Mohammed is here from Egypt. Welcome. So, Julia, I'm glad you joined the chat because I was reading the Wall Street Journal today. And if you remember, we had a conversation about, let's just say my thesis on the two-tier society, right? Where we see economic activity of the wealthy, I would say upper middle class to the top 10% of Americans, economic activity when it relates to spending is very, very strong in this country and globally, by the way. So check this out. And we briefly touched on this last night, but is there a bull market in luxury? Is there a continuous bull market right now in the luxury sector? And this is what I mean. We always say, you know, there's always a bull market somewhere. You just need to know where to look. So Hermes, I think I'm pronouncing that right. I'm not a big luxury type, materialistic type guy. Now, I just don't really know too much about that fashion stuff. It's just not me. But they're the maker of the French handbags. And they expect to increase prices across the board next year in 2023 by 5 to 10% off the back of a blockbuster earnings report. Sales revenues smashed Wall Street expectations, rising 24% year over year. So we have all of this. Think about what we covered this week on the live stream. Think about it. All the delirious and miserable economic news as it relates to housing, as it relates to the Empire State Manufacturing Index that came out that fell off a cliff, existing home sales data from the National Association of Realtors that came out yesterday, down big in terms of sales volume. And then we hear from companies like Hermes, also LVMH, which reported earnings on October 11th, and they're reporting double-digit sales growth across almost every single sector within the business. So luxury is going strong. Spending on luxury goods remains near all-time record highs, and demand is super strong. Hey, Cynthia Beal, good to see you. Welcome. Aaron Fraser says, hey, Tom, I worked for a home healthcare company, but it's not growing. In Virginia, it's a very crowded field. This is Aaron Fraser. Yeah, one of the things that I'm seeing, Aaron, a lot of the larger home healthcare organizations, especially the publicly traded ones, they'll look to acquire a lot of the smaller home healthcare organizations, right? And this happened a lot during COVID. So during C19, this is the Smith restaurant, by the way. Pretty good restaurant. I'd give it maybe 7, 8 out of 10. Not too bad. Not the best. But during COVID, a lot of the better, well-capitalized home healthcare orgs or assisted living facilities were able to acquire some of the less capitalized home healthcare agencies. You make a good point. Hey, Alien Guru, thank you so much for the $2 donation. Thank you so much. It says, hey, Tom, keep up the great work. I appreciate it. Thank you for the support. Dirk Digler says, hello, Tom. Sick walk as usual. Thanks for going uptown a bit. Love seeing it. Thank you so much. No problem, Dirk. Yeah, it seems as if very seldom do we actually get up to the Upper West Side anymore. Now, I'm not sure why that is, but I think today, since we were working out of the 57th Street WeWork, we'll have some time to sort of check out the Lincoln Center area. If you look straight ahead, Lincoln Center looks fantastic tonight. Maybe we'll have to go and check out the fountain. Photos from around New York says, Tom, LVMH has a building on 57th Street, LVMH Tower, 19 East 57th Street. We'll have to probably check that out. Now, LVMH, I think, owns a ton of different subsidiaries. So I think one time I was actually pricing out a fixed wireless deal for that particular company, but I think it was for a subsidiary of Sephora, I believe. I think a lot of the luxury brands roll up into the LVMH main corporate entity, but You know, it's really, really surprising. Well, maybe it's not surprising. I would say it's very notable that as we have earnings here roll out on Wall Street. Now, we talked about Snapchat. So one of the big issues that came out of Snapchat's earnings is the CEO of the company came on the earnings call and said that the vast majority of the advertisers that they work with are forecasting marketing budget cuts across the board. And off the back of that Snapchat earnings report, the stock got hammered, down 26%. But also, Alphabet, ticker symbol GOOGL, was also down off the back of that report, and so was Meta. But then on the other side, we have all of these earnings reports from these luxury brands, and they're knocking the doors out. They're knocking the doors off. They're blowing it out of the park. So it's an interesting dichotomy we're seeing. And I actually wrote down a statement from the CFO, which I'll read for you all in a bit. Dr. Longus says luxury does well because very wealthy will buy what they want in any economy. Yeah, I mean, that's a good point. Dr. Longus, it's a very good point. Jamie Massetti says, do you think Meta will change the internet like exploring the internet with VR? So I'm a little bit, this is what I'll say about that. Let me know what you guys think. I'm a little bit skeptical, but then again, there is an old saying that you should never bet against the innovators, right? So you could think about, I would say the big three. I'd like to call them the big three. The big three innovators right now, I think you could classify as Elon Musk, probably number one. Mark Zuckerberg is probably number two. And then number three is probably a tie between Larry Ellison and Jeff Bezos. So should I bet against Meta and should I bet against Mark Zuckerberg? Now, I don't think I will. I think I'll just sort of sit on the sidelines. I don't have any exposure to the specific stock. But I think if we revert back to what Peter Lynch always says, and Peter Lynch was the former Magellan Fund manager at Fidelity. So one of the most successful mutual funds of all time was the Fidelity Magellan Fund. And Peter Lynch was the portfolio manager, the PM. And one of the things he said is you need to do on-site market research and actually try these products and services firsthand. And I've never really tried the VR. I've never tried the headset that Meta is peddling, so who knows? So it seems as if there is a show coming out of Lincoln Center here. This is the box office. Julia M says luxury brands are able to spend on advertising, unlike other similar brands. Yeah, and I also think they have pricing power, right? I also think they have pricing power. Now, the CFO of Hermes came out and said, because I believe one of the analysts came on the earnings call and was saying, do you foresee any demand weakness in the next fiscal year? And he says, no, we see absolutely no signs that demand will slow for our products. And then in the next sentence, he says we're probably going to raise prices about 10% across the board. Now, I believe the average price of a handbag there is around $10,000. So if you really think about it, the clientele who are able to spend 10 grand on a handbag, is a 10% price increase going to be the end of the world? Probably not. Probably not. I mean, revenue is up 24%, year over year at Hermes. LVMH also reported a fantastic quarter. I believe they saw double-digit revenue growth in almost every single sector of their business, from Sephora and the like. The Mighty Bull is here, says good evening. Rich K says everybody has pricing power in this environment. Here, I'll take you guys on a quick walk to the back end of here. Vonda Howard is here, says, hey everybody, good to see you, Vonda. Thank you for being here. Ryan Beck says, hey Tom, there was an interesting news story on CNBC, I think regarding high-end champagne demand being at all-time record highs. Wow. Well, I believe LVMH, Moet Hennessy, right? Now on their earnings call, they said that their alcohol business is doing fantastic. Yeah, it just seems like, I think this is exactly sort of playing into the thesis, right? Of the creation of a two-tier society over the past 14 years due to quantitative easing. Because ever since, I would probably say 2011, right? The emergence from the great financial crisis, we had not only the Federal Reserve, but central banks across the entire world, right? Not only, I know we like to pick on the Federal Reserve, Fed Chairman Jerome Powell, but it's been central banks all over the world in this massive bond buying spree, the acquisition of debt, the expansion of the Fed balance sheet, artificial suppression of rates. So this has pretty much forced people to acquire and take on a lot of cheap debt, right? And with that, you know, we've seen the Fed inflation sort of target leading up until COVID stay right around that 2% target. So there was no need for them to really raise interest rates. But the issue now, why we sort of can't have a Fed pivot, is because inflation is at 8.5% or CPI is at 8.5%. So if you were to pivot this time, I think inflation would rage even harder than it is now. Mike says Costco has Moet for $39.99 a bottle here in California. Mike, what in your neck of the woods there in California, what are gas prices going for? Like, what is the average gallon of gas? You drive around, what do you see? Be curious to see that. The Usual Suspect says happy Friday, everybody. Good to see you. The Usual Suspect. Hope you're well. Now, speaking of the Federal Reserve, did anybody see, we heard, I should say we heard from one of the Fed presidents out of San Francisco, Fed President Dolly, Mary Dolly to be exact. And she actually came across quite dovish as opposed to the overwhelming hawkishness of the majority of the Fed presidents. Now, I don't want what I'm going to say to come across as, oh, just because one Fed president comes out here and says we should probably ease up on raising interest rates, or at least the pace of raising rates, it doesn't necessarily mean the entire Fed is going to pivot at the next FOMC meeting, which is slated for November 1st to November 2nd. Okay, now if you look at the futures market, we are right now still pricing in about an 80% probability for a 75 basis point rate hike. Now, Fed President Dolly from the San Francisco Fed President Dolly, she came out here and said, well, I think we should wait a couple quarters so we could see the full effect of the interest rate hikes we already put into place come into effect. So instead of raising 75 basis points, she's proposing maybe we'll just raise 50 basis points, and then at the next meeting we'll raise 25. Now, I don't think it's going to happen. I think we're going to get back-to-back 75 basis point rate hikes because I think the Fed is going to overdo it. If you look back throughout history, let me give you guys one more shot of the fountain here, because pretty soon they're going to close the fountain for the year. So we might as well check it out now. If you look back throughout history, the Fed tends to overdo it both ways. The Fed tends to do perpetual QE and really get a bull market cooking, just like we had in 2020 and 2021. I like to call it irrational exuberance. You saw pretty much every single stock on the exchange. You could have just thrown a dart at a dartboard, put any ticker symbol up. If you bought the stock over the last 2 years, you probably made money. Tons of speculation. But then on the downside, the Fed tends to overdo it and cause drastic demand destruction. So I wouldn't be betting on a pivot. Let's just say that. Patricia Ivory is here. Says, hey, Tom and everybody. Hey, Patricia. Silversmith says, end the Fed. I could get behind that. Good to see you, Silversmith. Tony says, where are you right now in New York City? I've never seen this. Tony, so this is Lincoln Center. Okay, this is Columbus Avenue or Broadway, 66th Street. This is actually right across the street from PJ Clark's and Hotel Empire. And if you haven't been here, if you ever visit New York City, definitely check it out because it is one of my favorite spots in the entire city. There's many shows here, many ballets, and this is also very, very close to the very famous music school, the Juilliard School. Hey, Tariq, good to see you. Rich K says, I agree, they should cut back on the interest rate hikes. Now, many people would agree with you, Rich, because, so here's one thing I'll say about housing, right? So yesterday we heard from the National Association of Realtors as they released their much anticipated existing home sales. Now, here's the thing. We've been talking about liquidity, right? And obviously, in order of liquidity, I always give the example, if you look at a balance sheet, right? A balance sheet is always listed in order of liquidity. So you'll have your cash and equivalents, your marketable securities, and then as you go further down the balance sheet, you'll see like property, plant, and equipment. And liquidity, essentially what it means is how fast can you convert something to cash? And real estate is a less liquid asset, okay? So a lot of the existing home sales data that we saw in September, that we just saw come out, and those numbers came in really, really bad, I would say. Transaction volume is really drying up. But in the real estate market, a lot of those existing home sales that closed, those buying decisions were probably made about maybe 2 or 3 months ago, right? Because when a home goes under a pending status and then contractual or contract closing, that process could take a couple months. So those buying decisions maybe were made about 2 months ago when interest rates were around 5%, 5.5%. So when we talk about the Federal Reserve is maybe looking in the rearview mirror and you have to be looking out the front windshield, maybe Fed President Dolly is right. Maybe Rich is right. All right, a little bit of anecdotal data here, but I think this is important. So this is Dwayne Reed, okay? And one of the things I said about Dwayne Reed is that I would never go to a Dwayne Reed because look at how long the lines are in here. The line always loops around the entire store because they don't have self-checkout. Now, I believe the only drugstore that does have self-checkout is CVS. And here's the reason why I sort of say that, because Rite Aid, if you guys remember, we actually covered Rite Aid's earnings report right here live on the stream. That has been a real big issue for them, is shoplifting and theft, but also sales volumes. CVS tends to be, I would say, a better shopping experience. So in my opinion, how many people do you think pass by these businesses like Dwayne Reed and Rite Aid just for the sole fact that they do not have self-checkout and you could just walk into CVS or something like that? So I think they need to start adapting. I don't know, a little bit off topic there, but I think it's important to point it out. Says, hey Tom, I could guess your age range by you saying that. Double Eagle. Hey, Sparks Carnival is here. Long time no see. So sometimes I go into Rite Aid just to talk to the cashiers. Funny. UWU says CVS is good at retention. They are giving 40% off coupons every week. Yeah, Joseph says I like self-checkout. Vonda Howard says I agree, Tom. Let's not forget Blockbuster. Yeah, Blockbuster was one of those, definitely one of those that was very reluctant to adapt. Troy Atman is here, says Tom. Target has a nice curbside delivery system. I never go into the stores anymore. I pull up and they come out and put everything in my trunk for me. It's incredible. Yeah, so speaking of Target, here we are. Now, another one of these companies, I always find it very funny when we talk about sort of automation, disruption in general. Anybody remember Circuit City? So Circuit City, I mean, obviously had a very, very similar business model to Best Buy, right? Almost pretty much the same thing. The reason why Best Buy is still around today, as opposed to why Circuit City is out of business, because Best Buy doubled down on e-commerce. Now, a large portion of their sales transactions actually happen online. So it just goes to show you, you really, really have to be willing to adapt. And usually the companies that show resistance to being able to adapt, those companies tend to go bankrupt. So check out these two buildings here, everybody. This is 220 Central Park South, and the building right behind it is Central Park Tower. These are absolutely beautiful additions to Billionaires Row, New York's Billionaires Row here. And this is walking down Broadway towards 59th Street, Columbus Circle. You have Vonda Howard's is in Radio Shack too. So a little bit of interesting, since it's Friday night, we're gonna have a kind of a relaxed stream. I do have some things to cover. We're gonna talk about the bond market too. Stay tuned for that. But does anybody know what was one of the top performing companies in terms of stock performance of the 70s? I believe it was the 70s, or maybe it was the 80s. Maybe I'm getting them confused. But it was a company by the name of Tandy Corporation. Now, does anybody know what Tandy Corporation turned into? Troy Atman says, Tom, what are your thoughts on telehealth and teledentistry? I'm very bullish on two main themes. So we always talk about thematics, right? And I think in general, healthcare is going to be a very, especially in the United States, a very stable and booming industry for obvious reasons. But if we really break down healthcare, I think if you talk about remote patient monitoring services or RPM services, that is what I'm most bullish about. And this sort of relates and plays into a lot of IoTs, things like that. So I would say I'm very bullish on telehealth, but I'm more bullish on the implications of remote patient monitoring. Hey, the LT Prod says, we used to use Tandy TRS-80 computers in school. Yeah, talk about, now I'm not old enough to remember that, but I always like to go back into history and study the previous stock market winners or leaders of the past. And one of the biggest winners was Tandy Corporation, which, was Radio Shack, and now they're out of business. Yeah, Dr. Longus is like Tandy Radio Shack. Crazy, right? I mean, think about just how fast our world is adapting. So this is Deutsche Bank Tower, formerly known as the Time Warner Center. This is the Deutsche Bank logo. Now, Deutsche Bank is a German investment bank, and they actually used to be located right on Wall Street. My old office actually used to be right next to Deutsche Bank. But now, it seems as if, I think Deutsche Bank was the last standing actual investment bank on the physical street of Wall Street. But now, obviously due to the introduction of electronic trading, algorithmic trading, and things like that, there's really no need to be on physical Wall Street anymore. A lot of the investment banks have moved uptown to Times Square, to Park Avenue, and now Deutsche Bank has moved here. Sabrina Fair, good to see you. Yeah, so Sabrina Fair says Mandarin Oriental. This is the front side. What'd you say? Oh, no. It's This is the front side of the Mandarin Oriental. And this, if you guys remember from the Miami live streams on Brickell Key, they also have another location. But I believe this is one of the many 5-star hotels in New York. And I think the nightly rates could get up to as high as $1,200 a night for one room. The LT Prods is Tandy TSR80 was the IT computer before Apple. Yeah, it's crazy to think about the evolution of technology and just how fast sort of these trends play out. Now, here's an interesting thought-provoking statement I'm about to make. Do you think there's any guarantee that Apple, as we know it today, will stay the top dog as it relates to, handsets and computers? Or do you think it's possible for some other company to come out maybe in 10 years where instead of everybody has an Apple device in their pocket, it could be some other company? Now, I think it's very hard for anybody listening to this stream to probably imagine that, but I always think the possibility is there. I always think the possibility is there. Hey, Big Talk is here. What's up? Aaron Fraser says, hey, Tom, how do you like WeWork? So I think, well, in short answer, I love WeWork. I think WeWork is a fantastic, well, I gotta be careful about how I say this because WeWork is a tough spot for a lot of people, especially due to the scandals that have happened with the former CEO and founder. But I will say this, I think that COVID-19 saved that company. Now you may be thinking, wait, COVID saved WeWork? How? Well, I'll tell you how, and this is sort of my thesis on that. And I think the data actually supports the thesis because if you look at Manhattan real estate today, the vast majority of these office buildings sit empty. However, what you can see is the Class A or the prime brand new real estate, such as a lot of the office towers and buildings in the Hudson Yards. A lot of the larger organizations like KPMG are deciding to move or dump their old leases in these more older buildings and move into more prime New York City real estate. And a lot of these older office buildings on Lexington Avenue and over, like to 2nd Avenue, sit empty. Now, where I think there is going to be a bull market that has been created by this hybrid work environment and remote work is shared office space. So instead of signing, a multi-year lease to have all of your employees work in the city in one office building, well, maybe your employer can give you a $200 stipend and you could work anywhere in the world from any WeWork office you want for $200. I think that would be a lot more efficient operationally, save the companies a lot more money, especially if you're a startup. And then maybe the company could mandate 1 or 2 days a week or 1 or 2 days a month where everybody has like an all hands call meeting in the offices. So I think WeWork is actually going to come out very favorably over the next couple of years. Alien Guru, thank you so much for the $2 donation. I appreciate it very much. Thank you for the support. This is the 157 building here. And then to the left is the Steinway building. Troy says, why use WeWork when you could just work at home? That's a good point, and I think there's two main reasons for that. Have you ever heard of the terminology environment fatigue? Is anybody familiar with that terminology, environment fatigue? So way back in my college days, I actually took a psychology class when we were actually studying this in relation to productivity. And people actually are more productive when they have the ability to work in their preferred environments. And if you're at a cubicle, the same cubicle every single day, or maybe you're, working at the kitchen and the kids are running around, you can't really concentrate. You could suffer from environment fatigue. So if you have the ability to work in multiple different offices around the world and you're in a different environment, there's multiple different other startups in that organization, not only are you probably going to be more productive, but you're also going to have the opportunity to meet a lot of smart people. For example, the WeWorks in New York City and Manhattan, there's a lot of really, really smart younger entrepreneurs that are trying to bootstrap companies. And it's really interesting to see them grow. But I don't know, that's just maybe one bias piece or thesis. Got yours says going to a place like WeWork is like putting on a suit. It changes your mindset. Maybe. I think it's a good comment. Laney James says, I don't miss my commute. Working from home is ideal for me. Yeah, that's another thing. Now, how much productivity do you think was lost within a 2-hour commute? Because for me, just to give some context, I commute on the Long Island Railroad, which the commute is roughly 45 minutes, but that doesn't take into consideration waiting around for the train, waiting in Moynihan train station. So I think a hybrid sort of work environment is going to prevail over the next coming years. That's what I think. Jay says, my business is out of my house. That's fantastic. Well, I mean, the more you could reduce the overhead of the operating expense, the better. Adrian says, Tom, I'm way more productive working at home. So do you guys think it also depends on what you do, right? Because obviously, let's say if you're an RN, if you're a nurse, you can't really work from home unless you're a visiting nurse and you're working at somebody else's home, right? So I think it really just depends on what your role is. Now, a lot of my friends are software engineers. So maybe as a software engineer, if you're really not having to work with clients, or as I like to call it, if you're really not in a client-facing role, then maybe working from home is better for you, right? If you could just sit at home and code all day, why not? Why should you have to come into the city and commute 2 hours a day? It just doesn't make sense. But let's say if you are in a client-facing role, right? Let's say if you're in sales, maybe you have to take clients out to dinner, wine and dine was the old terminology, or go on site for like site surveys and deployments, which I have to do a lot. So I think it really just depends on what your specific role is, I guess. Hey, CM is joining us. Says, hey Tom, in my former company, if your commute is too long, you won't be hired. Interesting, CM. All right, everybody, we are turning left on 57th Street. We are standing right under Central Park Tower, and all the way in the distance, you'll be able to see 432 Park Avenue. Zabatata is here, says, hey Tom, isolation is very dangerous. It's like a drug and always ends in depression. John Sorley says, Tom, I loved going into the office back in the day. Senzos is indeed worthwhile to keep. Watch on. Interesting. Cynthia Beal says, Tom, you also see clients, so being in the city is a smart idea. Yeah, that's true. And I also think for me, I think it's also personality based. For me, I'm still in my 20s, so I don't really just want to sit at home all day. I don't know. I think a lot of interesting comments in the chat, though. A lot of different perspectives. Jody says, I have an AV company. I need office and a warehouse. Interesting, says Jody Harris. Yeah, again, I think, we have a very diverse group here. People working in all different industries, so I think it really just depends on what you do. I think there's a lot of good comments here. Jay says, Tom, I am self-employed and I enjoy it very much. Ryan Beck says, Tom, you could definitely still work from home and be customer facing. It just cuts out the time of working in the office. That's a good point. So Ryan, question for you. Assuming you have a client facing position, What has been your experience with deal closure on Zoom versus in person? Have you noticed close ratio go down or go up or stay the same or no material change? Now, I would like for there to be a study done on that. Now, I think some salespeople, depending on if they really focus or leverage their interpersonal skills, I would say there's a pretty good possibility that remote sort of virtual Zoom or Cisco WebEx or Microsoft Teams could have potentially impacted their closing ratio. But others, maybe younger salespeople that are more, tech savvy, we're used to being on our phones and computers all day, I think that may have actually added to specific strengths. I don't know. I think for me, it's been about 50-50. I think with me, it's laborious being on Zoom calls all day. But I think that may be just a personality thing, honestly. Hey, Dusty Cole is here. GX72, good to see you. Got yours, says Tom. Video conferencing for real estate has been a huge win. Screen sharing with your face is the way to go. This is Got Your. Laney James says, I also don't miss the office politics and having it dressed professionally. Yeah, office politics are never fun. Let's just say that. Roy S says, it is about striking the right balance between work and the office remotely. Chris is here, says Tom, one size doesn't fit all. Great to see more model for work has come forward in the last 2 years. Yeah, I definitely agree. I think some companies are getting it wrong by drawing a very fine line. Danny Long says a person's occupation isn't always their ultimate task in life, says Danny Long. Ron says, unless your work requires in-person attendance, anyone else should be free to choose what's best for them. I think it's a good comment. Yeah, it seems like we have a very broad, very, very different opinions on this subject. So I think if I was the CEO of a company, this is sort of what my expectations would be. And let me know what you guys think, if this is fair, okay? I would say, I would reason with all of my employees and say, look, I'm gonna pull a report and see what your productivity was in 2019, before the pandemic, okay? So this is assuming that my employees have been working with me for a while. I'm gonna pull a report to see if it's salespeople, what did you sell, what volume, what is the customer satisfaction, and what was your retention rates in 2019. Now, I'm gonna give you 6 months. You could choose whatever you wanna do. If you wanna work from home, have at it, knock yourself out. If you wanna come to the office, have at it, knock yourself out. But we are gonna monitor productivity, and if you were just as productive at home, well, then you can continue to work at home and I don't care. But if I see a dip in your productivity and you're not selling as much, you're not being as productive, well, then I'm gonna make you come into the office. But if you're performing, you could freaking work at Jones's Beach. I don't care. That's sort of the precedent that I would set. If you're doing your job, if you're hitting your metrics, if you're crushing your number, if you're productive, and if our customers are happy, I don't care if you set up shop at Jones Beach. That's sort of what my stance would be. Now, many CEOs of investment banks, such as Jamie Dimon, also CEO of Goldman Sachs, David Solomon, they say the exact opposite. They're like, look, in order to run an investment bank, we need company culture, we need you in your seats. And they've requested everybody back. Now, I don't know if that's gonna lead to churn or high churn. I don't think it will, because these are very desired jobs. But I think over the long run it may. We'll see. Photos from around New York is like, how's the Wi-Fi on Jones Beach? Do you know Jones Beach actually has free Wi-Fi? not even gonna lie, Jones Beach actually has free Wi-Fi on the beach. You could thank Governor Cuomo for that. Or former Governor Cuomo before he got canned, I guess. Yeah, Adrian says the decision may not be that easy for most companies. All right, so let's say if I was running a SaaS company, like a software as a service company, that's what I'd say. Hey, Eyeglass Lady is here. Hey, everybody. I was a substitute teacher at home during the height of the pandemic because the schools were closed. Wow, I was not stressed out at home. So, Eyeglass Lady, did you notice a difference in your students' productivity? Were some students falling behind more than others, you think? I don't know. Interesting stuff. Very interesting stuff. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We do these live streams about 5 days a week between New York City and Miami, discussing the financial markets, and we'd love to have you along for the ride. I'll give you one more shot of the Steinway building up here. WW says, hey Tom, I teach high school math. Students definitely fell behind. It was extremely apparent, says WW. Yikes. So WW, follow-up question for you, because during the pandemic, I was actually working with a lot of, I would say, very large school districts. And when I was on calls with a lot of these superintendents, one of the main sort of issues or problems we had to solve was the digital divide. It was called bridging the digital divide. Because especially if you think about a big school district like LA or New York, you have a large portion of the population of these students where they go home and they don't have any internet access, right? So if you thought those students were falling behind before, well, if they have to complete work remotely and online and they don't have internet, well, they're gonna fall behind 10 times as much. So we actually had to deploy, Chromebooks with LTE connectivity or hotspots to a lot of these students. Because surprisingly, I mean, believe it or not, there's a big portion of students in this country that just don't have home internet, which is a huge issue, especially when you're talking about a pandemic and working and doing schooling remotely. Oh, check this out. So this building probably doesn't have like a working, what is it called? Not just a regular elevator, like a freight elevator. So they're probably putting things in through the window. That's insane. Wow. UWU says, hey Tom, how do you afford all the plane tickets between New York City and Miami? I work. Just work, man. Work. But honestly, okay, let's talk prices, because a lot of the airlines did report. And that's one of the reasons when I was choosing a second place to live, Miami was the choice, because you can get a plane ticket from Fort Lauderdale or Miami to JFK or LaGuardia, Newark, for like $70. So it's not bad. However, as I was considering Denver, Colorado, those tickets could be like $350, and I can't do that if I'm gonna be commuting, every month back and forth. No way. So it's actually affordable. It's like $75. It's not bad. It's not bad at all. Eyeglass Lady says, Tom, my district was also loaning out Wi-Fi hotspots with internet on them. Copy that. Rich cases will be interesting. How many people are working remote 10 years from now? I think it will be much less because of productivity issues. People will become complacent. That's true. Hey, Adrian is here, says, hey Tom, I work in finance, and they look at quality stuff like KPIs, key performance indicators. So Adrian, are you 100% remote now? VL123 says, is that the steakhouse where the mobsters got killed? No, I believe that's Spark Steakhouse, which is near the one and only Grand Central Station. So we're looking at Tiffany & Co., which is the very famous jewelry company here. Now, at the beginning of the stream, we were talking about, is there a bull market in the luxury market, okay? So a lot of the times on the live stream, we'll say there's always a bull market somewhere. You just need to know where to look. So we had LVMH and also Hermes report earnings, and that is the French handbag maker. And they absolutely crushed revenue expectations on Wall Street. I believe on a year-over-year basis, they grew their sales 24% to $3.07 billion. And the CFO comes on the conference call and says that they are going to be raising prices anywhere between 5 to 10% over the next coming year because demand is just so strong, and they think that consumers can absorb it. So after all of this depressive economic news and economic data we've been getting out, it seems as if spending in the luxury market at places like a Tiffany Jewelry, you know, pretty much any of these major stores we have here on Fifth Avenue, these flagships. Apple, we were just talking about how I was in the Apple store yesterday and it was so packed. It seems like demand is still very, very strong for high ticket items, selling into the high net worth and ultra high net worth sector. Adrian says, I'm actually hybrid. Copy that. All right, so we are walking past Trump Tower on Fifth Avenue, headed downtown. This is the very notable and famous clock outside of Trump Tower. And the huge American flag they have here. Hey, Jewel Morris, Tom, I just bought an Hermes scarf today. Very nice. Jewel Morris, good to see you. Thank you for joining. BZ says potential bottom in stock prices. Yeah, we'll talk about that. So we did have a follow-through day today. So I believe this was the 5th day of a rally attempt. And at 7 o'clock is usually when you have the final volume metrics coming in. And we were above average daily volume on the S&P and the Dow Jones Industrial Average. Now, I'm not sure about the NASDAQ. I'll have to look after the conclusion of this live stream. But we did have a follow-through day. So for anybody who's familiar with Can Slim, which is sort of the investment methodology of William J. O'Neill or Bill O'Neill from Investors Business Daily. Now, here's the old saying. And the old saying is that not every follow-through day is going to work, but no new bull market ever started without a follow-through day. So I think in this environment, right, where you have crazy amount of instability in the debt market, you know, that 10-year US Treasury yield is at 4.221%. We actually came down a little bit on that 10-year US Treasury yield. So I think we could have potentially seen a short-term top in yields. Maybe we will recede a little bit. And I think that was off the news. I shouldn't really say news, but off of a key comment that San Francisco Fed President Mary Daly said. And today she came out and said, and I quote, "The central bank should avoid putting the economy into a quote-unquote unforced downturn by raising rates too sharply and start to think about slowing the pace of increasing the Fed funds rate." And the final thing she said is that everybody's thinking that we're going to have a 75 basis point rate hike. And she thinks that we should tone it down a little bit and go 50 basis points and sort of wait to see what the interest rate hikes that we've already put in place, how that's going to affect the market, and give it a couple quarters, because it takes some time for interest rates to trickle through the economy and really start to show that demand destruction. So I think this could be a short-term tradable rally. Now, do I think the entire bottom is in and we're going to go to new all-time record highs? I personally don't. But at the end of the day, it doesn't really matter what I think. I think what matters is just following the overall trend of the market and following the rules, right? So I'm a can slim trader. I run a long short portfolio. And on a follow-through day, you have to get some exposure. Now, it doesn't mean you need to commit 50% of equity. But I think in this environment, like 1% of equity, depending on sort of how old you are, what your risk tolerance is, I think it's probably appropriate. But what you don't want to do is just jump right into the market on every follow-through day. You could test it. You throw out little probes into the market. If anybody's read Gerald Loeb's book, The Battle for Investment Survival. Has anybody read that book? It's a fantastic book. Battle for Investment Survival. Sam Oliver says retrace on light volume would be a buy. Yeah, I mean, Sam, I think you're right. Yeah, Ryan Beck says the Loeb Probe. That's another fantastic book. If anybody has ever read The Battle for Investment Survival, I'd say that's probably top 10 investment books, I think. For traders, at least. Strider 1239 says, how about 100 basis points for November and 50 basis points for December? This will be the Fed magic that they're lowering the increase. I don't know about that. I think, so Strider, what is it? I think last time I checked, futures traders are pricing in about an 85% probability of a 75 basis point rate hike at the next FOMC meeting, which I think is November 2nd. Man, it's already the end of October. Can you guys believe that? What is today, October 21st? That's insane. October is almost already behind us. Pretty soon we're gonna be talking about Thanksgiving. It's ridiculous. But you wanna know something that's better than Thanksgiving? It's right here. The beautiful St. Thomas Church. This is a staple, a New York icon. Look at how beautiful the architecture is here. Joseph Hardaway says, how do you feel about gold right now that the stock market is being very volatile? Well, I don't own any gold personally, and gold has been in a screaming downtrend. Now, 6 months ago, gold was actually trading near all-time record highs. And what I said was, if gold were to crack those highs, I would have probably been levered long gold pretty aggressively, but only on the breakout. Because I think with commodities in general, to me, I think in my sort of trading style, I'm only gonna really commit a lot of capital if it's like a clear setup or like a big breakout from a massive base. And gold is, kind of, well, at least at the time, it was looking like it was carving out a massive base, but it's broken down. Gold is broken down pretty aggressively here. I'll take you guys near Jeffries. Might as well. I'll show you guys the Jeffries building. It's actually one of my favorite buildings in the city. Now, here's what I do want you guys to look at, and I think this is very important, because one of the things I always say is if you want to know where the stock market is going to go, you got to keep your eyes peeled on the debt market or the bond market. And we've had some pretty big moves in the bond market so far. I think the bond market is very illiquid right now, which is very concerning. But we've been having a huge sell-off in the debt market, yields spiking. But did you notice what happened today? Sort of right around when we heard from Fed President Dolly, right as she sort of hinted at the idea where there could potentially be a pivot, we saw that 10-year Treasury yield actually come down a bit. The dollar came down a bit, and we had a pretty strong rally across the board, S&P 500, Dow, and the NASDAQ. So here's Jeffries, by the way. This is 520 Madison. So if you go to tradingview.com, speaking of LVMH, this is Sephora. I think that's one of the subsidiaries, I think you could call it, or one of the companies that are under that umbrella. If you look at a daily chart of the 10-year US Treasury bond yield, now not the actual bond price, look at the chart of the yield, you'll notice I'm not a huge believer in sort of candlestick patterns, but this is a pretty aggressive, what you would call like a hammer top or like a doji top. So we had a follow-through day on the S&P 500 and the Dow. The Dow Jones Industrial Average is actually back to its 50-day moving average, right? We closed right on the 50-day. I think the S&P 500 and the NASDAQ is going to rally to its 50s, and I think we're probably going to roll over from there, depending on how earnings roll out. Now, next week is going to be the most critical week of earnings, okay? We are going to hear from all the big dogs on Wall Street. We're going to hear from Apple, we're going to hear from Alphabet. Microsoft, I believe, is also reporting. And those particular companies, wow, check this out. You can see the top of One Vanderbilt from here. And those companies make up the vast majority of the market capitalization of the S&P. So if earnings come in strong, I think Apple's reporting too. If earnings come in strong, maybe this could be a sustained rally, at least to the 50-day. But I think you got to watch that bond market. I think if the bond market continues to sell off, I think you're going to still see pressure on the stock market. Okay, so Walking Minnesota says, yeah, Microsoft is reporting next week as well. Boeing, Caterpillar is also reporting. Yeah, it's going to be a very busy week. I think Monday and Tuesday are going to be the two big days. Meta, Facebook as well. Hey, Victor G is here. Patrick says, hey, Tom from Cleveland, Ohio. Good to see you. All right, let me just turn around here. I want to show you guys the Jeffries building. Now, the building is very unique architecturally. Now, notice how the base of the building is extremely wide, but it gets very, very thin at the top. And this is on the corner of Madison Avenue here. CM says Microsoft should do well. Well, whenever Microsoft, Amazon, and Google report earnings, the number one factor I always look at, and I've told you guys this probably 1,000 times, is the cloud service revenue. Now, the bread and butter for Amazon, many people think e-commerce. I think of cloud computing, right? So you have Amazon AWS, you have Microsoft Azure, you have Google's Google Cloud, which granted, it's still losing money, but it's losing less and less money as it gains a lot of market share. So I think cloud computing, as we look at thematics, is still very early in its stages, or early stages here. However, here's something that may be a little bit of an anecdote. Real quick, I'll show you BlackRock and Evercore. So this is the main office for BlackRock and Evercore right here. This is actually sort of a little atrium where you could have lunch, grab a coffee, things like that. I'll show you the top of the building. Here's a potential risk, and let me know in the chat what you guys think of this. Maybe this is a little bit too anecdotal, but I think it's appropriate to bring it up. I think you're going to see a lot of bankruptcies at a lot of high growth, sort of high beta, like SaaS startups that I like to use the terminology zombie companies, right? So when I think about zombie companies, the only real reason why they were allowed to exist in the first place is because we've been living in an environment of ZIRP. And ZIRP stands for zero interest rate policy. So these companies could just say, look, we're just gonna focus on top line revenue at the expense of our bottom line. And we could continuously take on debt acquisitions or continue to take on debt in perpetuity because it's very cheap. So we could use the new debt to pay off the old debt, to pay the bills, to pay the employees, and grow our revenues. Well, that business model is now upside down, right? So now these companies can't take on cheap debt anymore. So what happens to all of these startup software companies? This is my favorite building in the city, by the way. This is the Seagram building. So what happens to all these startup tech companies, software companies that are gonna go out of business, that have licenses of 365, that have observability contracts with a company like Datadog, that use Amazon AWS cloud servers, right? Do you think Amazon and Datadog and all these other companies are gonna get paid? Or do you think they're gonna get stiffed on all of that, on all those tech contracts? Because you have to think about how this sort of startup ecosystem works. You know, a lot of these SaaS startups rely on a lot of other SaaS companies to run their business. Does that make sense? So maybe, you know, I'm overestimating the doom and gloom, but if a lot of these companies start to fall one by one, you know, how much churn do you think you're gonna see in Amazon AWS or Microsoft Azure? I don't know, something to think about. Something to think about. So we are now looking downtown. You can see the MetLife building. You can see the top of the One Vanderbilt. Ren10 says yes, lots of SaaS need Okta to run as well. Yeah, so Okta is ticker symbol OKTA. They compete against a company called Ping Identity. Oh, look what's going on here. Something's going on. They specialize in IAM cybersecurity, and that acronym stands for Identity and Access Management. Now, the funny thing is, Ping Identity was actually just taken private by Thoma Bravo, so Orlando Bravo's private equity firm. Just took the company private. And Ping Identity was taken public by Vista Equity Partners. Is anybody familiar with Vista Equity Partners? So here's a look at 432 Park Avenue. Hey, I see Blues Rider here. What's up, Blues Rider? Good to see you. Yeah, so UVU says healthcare has been a real big standout. You're right. You're right. Mike C says, Tom, do you think the few that get pensions in the United States could lose them because of things happening in Great Britain? No, I think, so Liz Truss, we'll talk about that a little bit. I think it's appropriate to talk about that because Liz Truss stepped down, right? Well, she was forced to step down. Now, the reason why she was forced to step down is because they thought it would be a good idea to do, hold on, let me cross the street here, to put together one of the most aggressive stimulus bills by borrowing a bunch of money, slashing taxes, at a time when the UK are experiencing almost 10% inflation. So I don't think that was the time to do that, and markets responded very, very poorly to that. Now, here's the crazy thing. The way markets responded was essentially telling Liz Truss that what she was going to do was going to work. Hold on one second. For some reason, I don't think we were recording in 1080p. Could you guys check if we are recording in 1080p? Maybe let me know in the chat if we are. So essentially, the bond market was saying, and the currency market, right, the pound sterling was saying, yeah, this is going to work. This is going to turbocharge the economy, and it's going to freaking rip inflation even higher than it is now. So the problem with that is a lot of these pension funds are extremely, extremely over-levered, like scary over-levered, right? And again, I think this goes back to my thesis that artificially low interest rates forces people to take on risk, right? Real quick, this is Blackstone. They bombed earnings too. Net incomes were down across the board at Blackstone because their private equity portfolios were not performing. 345 Park Avenue. As we continue down Park. But essentially what happened is there's a lot of derivative products on a lot of these gilts. So bonds or gilts, we call them bonds, they call them gilts. And when the bond market started to sell off and when interest rates started to go up, those sort of derivative strategies don't work in I would say a rising interest rate environment. They only work when interest rates are extremely low. So this was causing a lot of margin calls. So the bond market was selling off very aggressively. If you understand the relationship between rates and bonds or yields and bonds, as bond prices sell off, yields spike. That caused a lot of margin calls across the board, a lot of these pension funds. Oh, this looks like a big party here. Wow, maybe it's a wedding. This looks really nice. So this caused a lot of margin calls. And in order to meet your margin call, you need to post collateral. So you need to sell assets, right? So it started this chain reaction of a massive sell-off. So a lot of these pension funds started to had to dump other assets to meet their margin calls. I believe the pound sterling was getting obliterated against the dollar and other currencies. And this forced the Bank of England to have to pivot, right? And if you remember correctly, the Bank of England was really taking the Federal Reserve's lead with keeping interest rates high. They're like, we're not going to pivot. We're entering into an environment of quantitative tightening. We're not buying any more gilts. Well, they were forced to pivot. They didn't call it quantitative easing. They're like, no, we're not going to call it quantitative easing. This is to stabilize the financial markets. It's not quantitative easing, it's to stabilize the financial markets. So the Bank of England had to go in there and buy gilts to bring down yields, to stabilize bond prices, and to save the currency, right? Essentially, we had a meltdown in the financial markets due to this massive stimulus spending plan. And now Liz Truss is no longer the prime minister. Now, I wonder who is going to be the person to replace Liz Truss. I guess nobody knows. Mike sees aren't U.S. pensions also very levered? Yes. And a lot of pension funds now are actually speculating in things like private equity, investing in the hedge funds. Because again, look, and I think we could really debate this, and I think there's probably a really good debate to be had. But in my view, I think the Federal Reserve has really created this mess because, I tweeted something today. If you guys aren't following me on Twitter, if you want to connect over there, you could follow @Walks Wall Street. Now, I got an interest payment from my bank, and I got 4 cents. 4 cents was my big interest payment. Now, I don't remember, but back in the day, when my grandparents were, in their prime working age, maybe headed into retirement, they could make a decent income off in the yields in their savings account, maybe 4%, 5%, right? You can compound out wealth pretty substantially at that rate, but not anymore. In the environment that I grew up in, I would say in the teens, right, leading up to 2020, 2021, 22, and the like, you know, we get paid nothing in interest-bearing accounts. So what does this do? It forces market participants to go out there and search for yield. So more people start to speculate on the stock market. More people start to speculate in the derivatives market and the options market, because a lot of the debt over the past decade has been negative yielding, not only in the United States, but globally. So I think the Federal Reserve, I really hate, I don't want to sound like I'm being too biased against the Fed, but I think a prolonged period of artificially suppressed rates have created these problems. And I don't know how we're going to deal with these problems, because anytime we do try to do some sort of quantitative tightening, anytime we do try to raise interest rates, something breaks. And how do we fix it? Well, we don't. We just go back to QE. So I really don't know what the answer is. I really don't. Hey, JR is here. Good to see you, JR. Hey, Ryan Beck says, Tom, the IRS approved being allowed an additional $2K in your 401k. Yeah, Ryan, I saw that. I think that's good. I think that's really good. I'm actually happy about that. James Tigers says $300 trillion in debt around the world. Agreed. If you guys want to know a little bit more of my thoughts on the financial markets, if you scan the QR code on your screen and you punch in your email, I write a free investing newsletter every other Tuesday, usually after the market close, where we talk about a lot of the topics we discuss on the stream. Anything from the US equity markets, anything from emerging markets, fixed income, housing market. So if you want to join us over there, feel free to punch in your email. It's free. But check out this view of Grand Central Terminal. You know, maybe tonight we'll take a quick walk through Grand Central Terminal. We haven't been there in a while. This building that's under construction here at 270 Park Avenue is going to be the brand new JP Morgan Chase Bank. So Jamie Dimon, this is his creation right here. Looks beautiful. Now, Park Avenue is one of my favorite places in New York City. I love the energy here. Hey, Western Mass Dave is here. Happy Friday. Good to see you. Denise, New York City is here. Says, hey, Tom. Welcome, Denise. Blues Writer says, Tom, Ally Bank offers 2.35% on savings today. Yeah, I think also maybe Marcus by Goldman Sachs is sort of one of those online type banks that offers high yield savings as well. Now, we covered Goldman Sachs earnings report on the live stream. Jay Krabby 86, thank you so much for being here. Yeah, Ryan Beck says that seems like a much better location than the other JP Morgan Chase office. Well, they have a ton of locations. Now, they have a location down by the Staten Island Ferry, but they also have a location right here, literally right across the street at 277 Park. But yeah, it's supposed to be completed relatively soon, I think in the next 2 years. And that is going to be the main headquarters of the JP Morgan Chase. I'll give you guys one more shot of the 432 Park Avenue. Hey, Mario Lopez, good to see you. Wow, John Feldman says, Tom, I got 14% on a CD back in the late 1970s. Oh my gosh, could you imagine that? Now, my view is that us going back to a normalized interest rate environment is not all that bad. But here's the kicker. There's a lot more debt now than there was back in the day. So I don't know how this is going to be sustainable. If we have, let's say if the 10-year US Treasury yield goes to 6%. Let's say if it goes to 5 or 6. Right now, the 10-year US Treasury yield is what, 4.22%? It's came down a little bit, but man, 14% on a CD. That's insane. Yeah, I got my, I always get a notification from my bank when I get either dividend payments or like an interest sort of deposits. And I'm like, oh, wow, let's see what I got. Because the S&P 500 dividend, they just paid it at the beginning of this month. So I was like, nice. But then I was looking at the interest payment and I was like, oh, 4 cents. This is fantastic. It's like, I'm so glad rates are going up. Yeah, Austin city limits. So true. So I wanted to cover one more thing for everybody. So let me give you these 2 key levels to look at here, because we did get a follow through day. So here's 2 key levels. All right. So on the S&P 500, my level where I'm looking for this market to rally is back to its 50-day moving average. And right now that sits at 3,885. Okay. The NASDAQ composite, its 50-day moving average is at 11,500. And the Dow Jones Industrial Average, that 50-day moving average is at 31,082. And that's where we're trading at right now. So usually during these bear market rallies, now I don't think this is the bottom, but I think it's a potential tradable bottom in the market. And once again, these aren't suggestions to buy or sell anything. This is just an open conversation talking about where the markets may go. But usually the market tends to revert to the mean, right? And it usually tends to rally back to a 50-day moving average or a 200-day moving average. Now the problem now is that many of these major moving averages across the board of all the major equity indices, the price action is rallying into declining moving averages. Okay, so a lot of these moving averages are already rolled over. But still, very tradable rally if you think about it. Yeah, Zach Truce is just a little Wall Street Journal hype, and the Bears get wrecked. Come on. All right, so interesting article coming out of the Wall Street Journal today. And it was funny that the article we talk about all the time, right? So one of the things that I always like to bring up in the chat is always make sure you look for emerging industry trends, right? Now, from an investment standpoint and from a potential job opportunities and career standpoint, I always say the number one thing is the thematics, right? Because if anybody's ever read One Up on Wall Street by Peter Lynch, I think that's one of the greatest investment books ever written. Now, one of his main key points that Peter Lynch would always say is you got to make sure that these companies have a good product, that are in a really, really big emerging industry trend or a theme. And I think, in my view, one of the biggest themes for both, I would say it's just a massive TAM, big total addressable market, is cybersecurity. Now, we've done many streams on different types of cybersecurity. We've done streams specifically on zero trust, cybersecurity. We've done streams on the history of cybersecurity, going back to traditional, you could think about the traditional hub and spoke networks. Now, back in the day, for all the architects out there, wow, that's the first time I've seen like these type of electric scooters ever in New York. Maybe we'll get the Lime or the Bird scooters here. Who knows? Now, back in the day, in order to secure a traditional hub and spoke network, it was something called a castle and moat type cybersecurity. Anybody remember? You'd throw a big firewall up, and anything on the inside of that firewall is safe, and anything on the outside of that firewall is deemed malicious. Well, here's the issue now. Well, that may have worked back in the day, but it doesn't really work in a very data center centric world, right? Now, a lot of on-prem infrastructure is not only on-prem. It sits in public clouds like Amazon, AWS, Azure, and the like. This is the Yale Club, by the way, very prestigious. I've never been in, but I would like to go if anybody wants to invite me. So you need new ways of cybersecurity, right? So anyway, I'll cut right to the chase. Wall Street Journal reporting a cybersecurity worker shortage. So amid all of the negative news you hear about the labor market, amongst all the layoffs, out of a big survey of chief technology officers, CTOs across the board are unanimously saying that they just cannot find enough workers who are well-versed in cybersecurity infrastructure. So get this, the cybersecurity talent gap grew by 26.2% over the past year, with about 3.4 million unfilled cybersecurity jobs worldwide. So if you're graduating college, maybe you're just going into college, maybe you're looking for a career change, maybe you have kids that you're putting through school, maybe you can give them a little bit of a direction to go towards cybersecurity. Maybe you want to be on the engineering side, the product management or development side. Maybe you want to be a sales guy like me, selling cybersecurity software. Who knows? I think there's a lot of lucrative opportunities and abundant opportunities to work in cybersecurity that's going to provide you very good working experience and potentially, even better, I would say, market performance. Let's say if you're working at one of the, I would say, more notable cyber companies, and maybe you get some sort of registered stock units, something like that. So just thought it was interesting. Hey, Style is here. Says, how much do they make? Well, I think it varies. I think it varies depending on what the position is at those cybersecurity companies. But very, I would say, above average paying jobs. If you're gonna work at like a Palo Alto Networks, maybe as like an account executive or an engineer, they're probably pulling, 6 figures. All right, so we are outside Grand Central Terminal, and check out the Chrysler building here. Hey, I see Sunshine NYC, what's up? Happy Friday, Sunshine. Good to see you. Dan Zhang says, Tom, what are some of the best cybersecurity companies to work for right now in tech sales? So if I had to pick, right? We'll wait till the bus goes by. So if I had to, let's say if I was looking for an enterprise account executive job at a cybersecurity company, I would say my top choice would be Palo Alto Networks. That would be my top choice. Number 2 would probably be Zscaler. Now we could go into really do a deep dive into why I think those two, but I think Palo Alto Networks is a clear number 1, and Zscaler is probably a number 2. Hey, Old Tape Archive, good to see you. This is Tom. How about cybersecurity investments? Yeah, I mean, I think as the industry as a whole, if you think about the theme, I think that's going to produce outsized returns once we get back in gear in a bull market. Flying Panda says, hey Tom, what are your thoughts on Rapid7? I'm not too familiar with Rapid7, to be honest. Now, I know the company. But I'm not too familiar. I've never really ran into their products. None of my customers use Rapid7's products. See, this is what I'm talking about. So, do you guys remember when I was talking about people that are like road rage? So this guy is blowing through the crosswalk just to speed up to the red light. It's like, listen, pal, just relax. You're gonna get to where you need to go. It's gonna be all right. That's how people get killed. I mean, these people need to relax, man. Hey, Travis is here. Says hello, thank you for doing the live. I just stumbled across your page. Well, thank you for being here. I appreciate it. If you guys are enjoying the live stream so far, feel free to leave a like on the video and hit the subscribe button if you are new. We do these live streams about 5 days a week, starting at 8:30 p.m. Eastern time, for those of you who want to join us when we go live. Rachel Abreu is here, good to see you. Yes, sunshine is like everybody's in a huge rush. It's like it's New York City. There's going to be traffic. It's like, hey, we got Patrick, New York. What's up, Patrick? Happy Friday, man. Hope you have some good plans for the weekend. So this is Salesforce Tower. Style says you have me interested in a career in engineering. Yeah, I mean, and you know, here's another thing I'd like to add. When you're talking about software engineering, and maybe even if you want to work at a cybersecurity company, there's a lot of very good certificate programs that you could enroll into. You know, I've known some people personally that don't have a 4-year degree, but just went to a type of coding boot camp, and that landed pretty good paying jobs. You know, right out of the boot camp, you can land a pretty decent paying job, you know, base salary 90,000. You know, and as you work your way up, maybe you become a software engineer, you're definitely going to be in the 6-figure range. I think, you know, I always just like to keep on top of the emerging trends, especially if you're a salesperson, right? Because if you're a salesperson, here's the kiss of death for any salesperson, okay? I'm gonna give you guys the keys to the kingdom here. You do not want to be selling into a declining industry, okay? You could be the best salesperson ever. You could sell everybody under the water, literally. You could be the sharpest guy, the sharpest girl, but if you're not in the right industry, not a good look. So I think if you know you have the talent as a salesperson, you want to look to break into those industries that have a massive total addressable market, right? And that's why I think even if you're not interested in investing, you should still be paying very close attention to how a lot of these companies report their quarterly earnings, because if you are an account executive at a software company and every single quarter they miss Wall Street expectations and they have declining revenues, well, how do you think those salespeople are doing, right? But let's say if you get on an earnings conference call at a software company and they're like, yeah, we grew our revenues 300% quarter over quarter, we're killing it. You know, revenue growth and product demand has never been better. Well, somebody has to generate that revenue growth, right? And those are the account executives. Those are the enterprise account executives. So just keep that in mind for anybody who's looking at, you know, a sales career as an account executive, enterprise account executive, and software sales, tech sales in general. Hey, Ian, what's up? Good to see you, Ian. Says, I'm in solar sales. Very nice. Dallas is here. Says, hey, Tom, good evening. How was your day? It was a good day. This week was busy, though. This week was really busy. What about you? So this is one of these Amazon Go stores. Has anybody ever been into one of these? So supposedly, in these Amazon Go stores, you just walk in, you don't pay for anything, you just walk out and it automatically bills your Amazon account. Now, we were talking about self-checkout on the stream. I think this is self-checkout on steroids. There's literally no employees at the store. I think there's only maybe one or two on call at a time, just stocking the shelves. JR, good to see you. Sweet country living in Michigan. Welcome. Yeah, Austin City Limits says that's amazing. Has anybody in the chat ever been to one of these Amazon Go stores? I haven't, but maybe tomorrow, just for some market research, maybe I'll go in one. Hey, Wendy England, good to see you. Dusty Cole says, Tom, you've been in New York City for a long stretch. When are you going to be back in Miami? I should be back November 1st. Now, I'm renting out my entire place. Excuse me, I think I told you guys, but I'm renting out my entire place for the month of October. So I will be going back November 1st. And then I should be back for the holidays, like Thanksgiving. Joan, welcome. So if we just do a quick recap of earnings, right? Because we are in the thick of Q3 earnings season. Whoa, before we do that, I want to show you guys the Empire State Building color scheme tonight. Look at this. Now, why do you think it's lit up like this? Looks like the Mets. This sort of looks like the color scheme for the New York Mets. But I don't know exactly why. Hold on. This is Bank of America. They reported earnings last week. Brian Moynihan. Wow, team, check this out. What do you think? All right, let's give this a score here. I'm going 9-3. I'm going 9-3. What do you guys think? I'm going 9-3. Hey, Miss Brown Eyes. This November 1st is my birthday. Happy birthday, Miss Brown Eyes. Thank you for joining tonight. Oh, is the New York Knicks celebration? Is that right? Patrick says I got 9-5. Not a bad score. Not a bad score at all. Hey, Natalie's here with the 8-9. I respect it. Now, here's my biggest takeaway from the earnings reports of the big banks, I would say so far. And so far, my takeaways is obviously investment banking revenues across the board have declined severely. We talked about Goldman Sachs. We talked about Morgan Stanley, Bank of America. Investment banking revenues, equity underwriting fees down materially, M&A activity down, but not as bad as a lot of like the talking about initial public offerings. M&A activity is still relatively robust. But one of the other key things that we reviewed that I think is just quickly important to review as we go into next week when we talk about all the big tech companies is the health of the overall consumer, right? So a lot of times when these big banks report, we can use this as a proxy for the health of the US consumer. And so here's a couple ways we could do that. We could look at the credit card delinquency data from some of the largest issuers. Now, here's what we could conclude from that data. Now, the biggest thing that we can conclude is that we have not seen a material uptick in short-term delinquencies as well as long-term delinquencies, which would be about a 90-day plus delinquency on consumers not paying their credit cards, right? We haven't seen that. Delinquencies actually continue to remain below pre-pandemic levels. However, on Bank of America's earnings report, the CEO, Brian Moynihan, did say that they're seeing a little bit of an uptick in late-term delinquencies, which would be 90 days plus. But generally, people are still paying their bills. So that's number one. Number two is the health of the, I would say, the health of the balances. And checking account balances remain above pre-pandemic levels as well. This is Bryant Park, right here on West 41st Street, 6th Avenue, Avenue of the Americas. And I think this could give us a pretty good forecast into maybe the earnings report of like an Apple that is reporting next week. Now, where I'm a little bit nervous is as it comes to Meta, as well as Alphabet or Google, because those businesses are very dependent on advertising. And one of the things that we saw from Snapchat's earnings report, hold on. One of the things we saw on Snapchat's earnings report was a decline in advertising revenue. And the CEO of Snapchat actually came on the earnings conference call and said specifically a lot of the advertisers that they deal with are reducing their marketing budgets for next year and reducing them pretty aggressively. So what does that mean for Facebook? What does that mean for Google? I think it may mean the same exact thing. Another company would be Trade Desk or The Trade Desk. So I think that's something we need to be aware of. We could see big misses from Meta. I think Google may be a little bit more isolated than a company like, obviously, Snapchat, because there's, Google pretty much dominates in search. You could think about YouTube advertising. But I think we just need to keep that front and center on our mind as we go into next week's earnings. Mike C says, Tom, Meta needs to ditch the metaverse and go back to being Facebook. Yeah, I mean, we'll see. I mean, is this one of those things where they're making a big bet too early? Meta could be right. Mark Zuckerberg could be right. He could just be early. Who knows? Sparks Carnival says, I think Apple is better cushioned than Meta. Well, the funny thing is, here's something that's a little bit ironic. One of the reasons why Snapchat has been really impacted and hurt here as it relates to the advertising declines is because of Apple. I hate to say it, but with their new security updates, a lot of these advertisers are not allowed to track the internet activity of a lot of Apple users anymore and serve them targeted ads. So that's been impacting Snapchat a lot. Hey, Teresa Diaz, thank you so much for the $2 donation. It says 22,900 subscribers. Whoa, that's crazy. Thank you so much, everybody. I appreciate everybody who's been joining the live streams, chatting, communicating with us, and subscribing to the channel. I appreciate you a lot. This has been really fun so far. CR says, I've never posted on Facebook. So I did have a Facebook account back in college. I never use it anymore, and I think I've actually may have deleted it. The only forms of social media that I use is Twitter, number one, mainly because of FinTwit, financial Twitter, and YouTube. This is Joe's Pizza, fantastic spot. Mister is here, says hello. Yeah, JS says it's more of an Instagram world these days. Well, I mean, that's a good thing that Meta has exposure to Instagram. Meta owns IG, which is good for them. Donna, California says, Tom, will you do live streams in Florida? Yeah. So we do live streams in the heart of downtown Miami, as well as South Beach. I think you guys are gonna like the Miami live streams. Now, many of you have already seen the Miami, Florida live streams, but we do have a lot of new people. But Miami is a very cool city, and definitely looking forward to being back in Miami. But we usually split our time 50-50 between New York, Manhattan, I'd say. Austin City Limits is like, do you have your battery pack with you? I actually do. I finally charged it. Let me show you guys Joe's. So Austin City Limits, I think I told you guys, Joe's Pizza is like a big tourist attraction. I don't even think it's that good of a place. I probably shouldn't be saying that since I'm right outside of it. But they actually opened up a place in Wynwood, Miami, which is sort of like an up-and-coming type of Brooklyn-style neighborhood in Miami. Has anybody heard of the Wynwood district? But Joe's Pizza did open up right there. Yeah, Google's like, it's like slightly above average at best. Speaking of Google, you guys are reporting next week. Yeah, Patrick, New York. The line is huge, dude. What the heck's going on over there? Friday night, everybody wants to go to Joe's. All right, here's what I'd say. There's a spot on the Upper West Side of Manhattan that I think is 10 times better than Joe's. It's a fantastic pizza place. And it's called Made in New York Pizza. Now, here's the crazy thing about it, okay? The owner of Made in New York Pizza, I believe, used to work at Prince Street. I always forget I shouldn't... So anyway, the guy used to work at Prince Street, right? Prince Street Pizza, which is a great pizza spot, by the way, one of my favorites. And he opened up his own spot, Made in New York. And I think Prince Street Pizza is suing Made in New York Pizza because supposedly he stole the recipe for the square pepperoni slice. Did anybody hear about that? I saw an article in the New York Post. It's a little bit of pizza wars there. Marcy's has never been to Prince Street Pizza. Wow, Marcy, when you visit New York, it's worth it. Now, I will say, if you go on the weekends, Marcy, it's probably going to be, I mean, the line is going to be long, like really long. But look, if you're just visiting, I think it's worth it. It's a good slice. I think it's good. Hey, Dirty Dogs, as you said, Joe's open in Wynwood. Yes. So I was going to go and I was going to do a live stream past Joe's in Wynwood. There's no cell service in Wynwood, like non-existent. But yeah, Joe's opened up a spot in Wynwood. Crazy, right? I'm gonna go, I'll let you guys know how it is. But isn't that crazy? Ron says, yep, that's correct. The owner worked elsewhere and apparently there was some controversy and they stole the recipe. That's crazy, man. Now, again, allegedly, but New Yorkers take their pizza very seriously, as you can tell. All right, since we're coming at the end of the live stream, I'm going to tell you guys a funny story. Yeah, Friendship Light says, what is so special about Joe's? I think it's just it's a New York icon as it relates to how old the pizza place is, right? A lot of celebrities have gone there. It's been there for a long time. Now, it's good. I'm not saying it's bad, It's a good spot, but it's not worth waiting in line for 40 minutes. It's not even worth waiting in line for 10 minutes. You know, I just would pop in any pizza store and get it. All right, since we covered a lot in the live stream tonight, we talked about the luxury market. I think there's a big bull market that's holding up. In the luxury market, we saw LVMH report fantastic earnings. If you guys have time this weekend, I would highly suggest going on the investor relations page of LVMH, listening to the earnings conference call. I think you guys are gonna get a lot of value out of that. Also, big news out of Hermes, which is the French, handbag maker. They blew the doors off of earnings. CFOs announcing they're raising prices 5 to 10% across the board. They blew their revenue estimates out of the water. Sales rose about 24% year over year to 3.07 billion. Big bull market in the luxury market, no demand destruction there. According to Jerome Powell, wants demand destruction. Doesn't look like we're gonna get it in the luxury market. So to wrap this up, if you guys want a good laugh over the weekend, I'm gonna give you guys a funny video to watch. All right, so if you pull up another window in YouTube and type in Joe and Pat's Pizza Review. Now, the guy who owns Barstool, like the sports betting company or sports media company, he does like these pizza reviews in the city, and I cry laughing hysterically every time I listen to that pizza review. So if you want to laugh, look up the Joe and Pat's Pizza Review. It's almost like unbelievable. It's like, I don't know how to describe it. I can't even describe it to you guys. And the only thing I'll say, you're gonna have a good laugh. That's all I'll say. But Joe and Pat's is actually probably one of the better pizza spots in New York, by the way. Now, I think their original location is actually in Staten Island, I think.
How do you even know that we're going to work?
Wow, look at this. This is always my favorite shot of the Empire. The lights just changed on us. But this is still a good color scheme too, the classic white. I think it looks beautiful. You know, I really hope that this building right here, 1350 Broadway, I hope this building never gets sold. Because if it does, I have a feeling they're gonna build a massive, super tall high-rise right here, and it's gonna block the view of the Empire State Building. So I really hope they never sell that. I hope this Santander Bank stays here forever, because if not, it's gonna block that view. That's a fantastic view. All right, so now we are crossing over to the very famous flagship Macy's location. Hey, Michael Dwyer, this is Tom. Thanks for the research you did for tonight's walk. Learned a lot. Well, thank you for being here. I appreciate you. Thank you, Michael.
Taking care of Maria got me involved as a nurse, because watching someone go through something very scary and still being so positive, optimistic.
Oh, this is also a good shot of the One Vanderbilt here too. The LT prod, that's right. It says unless someone owns the air rights, we should be good. Yeah, that's another crazy thing in the city. You have to buy air rights. Gary Carpenter says, who owns the Empire State Building? I think it is called the Empire Realty Trust, and I think it's actually a publicly traded company. Am I right on that? Could anybody look that up? I'm actually curious myself. But I think it is the Empire Realty Trust. I think they trade on the NYSE. Yeah, Dirk says, Tom, thank you for turning me on to One Vanderbilt. Sick building, love the architecture. Does anybody remember when I was streaming one night and I was filming the One Vanderbilt? This random guy comes up to us and he's like, I effing hate this building. I was like, whoa. I was like, really? Why? He's like, I just hate it. It's all this new style architecture. And he was really upset. I was like, all right. I think that may have been a couple months ago. Hey, Carol H is here. It's nice to watch your stream again. I was just in New York City on my way to Europe for my birthday. Hey, that's awesome. Carol, happy birthday. Good to see you. Yeah, Carol, I think you told us you used to have a place here, right? In the Herald Towers? Yeah, it's good to have you back on the streams. Happy birthday to you. Hopefully you had a good one. Now, next week on the live stream is going to be insane. Very, very busy. I think we're probably going to have to make each live stream like 2.5 hours. Just because we're going to do a deep dive into every single earnings report. Now, we did do a deep dive into every single major bank that reported, such as Goldman Sachs, JP Morgan. We talked a little bit about BNY Mellon, but mainly just the broader banks and pretty much everything that we expected, right? Investment banking revenues down aggressively. And it seems like the banks that fared better were banks that had exposure to retail. So Morgan Stanley, obviously they don't. Goldman Sachs does a little bit with Marcus, but very unprofitable business. Let's just say the retail segment at Goldman. Well, I'm gonna put you guys down for a second, all right? Give me just 1 second. I'll put you guys down. You could have a nice view of the hot dog guy. Sorry about that. Western Mass Daves has got to love the hot dog guy. I love the hot dog guy. Big fan of the hot dog guy. Also, if anybody, we did talk about cybersecurity a lot today. We talked about that specific article that says that there is a shortage of cybersecurity workers. So if you want to join our Discord, so if you look in the link in the description down here somewhere, feel free to join that. If you guys have an interest in working in tech, cybersecurity, tech sales in general, join us over there. I think, you know, if you want somebody to glance over your resume, if you want me to take a look at it, anything we could do to help each other out, we're going to do it. So that's probably the best place for networking opportunities on the channel. All right, this is 32nd. We're gonna go down 2 more blocks. Then we're gonna walk over to Moynihan, where I gotta get the train. If you continue down 32nd Street, this is Koreatown. Extremely packed tonight. Hey, Brian James, thank you so much for the $2 donation. You're very, very kind. So I'd like a hot pretzel and 3 chili dogs. Thank you, Brian, for the donation. Hey, Dallas, this looks like another stunning stream there. Thank you again for the stream. Thank you, Dallas. Styles says, what other careers would you suggest related to tech/engineering field? As it relates to boot camps? All right, I'll give you a couple. I'll give you 2. As it relates to tech, I would look into getting a lot of these Salesforce and ServiceNow certificates, because a lot of times at these companies, they need Salesforce administrators and also ServiceNow admins for like ticketing and things like that. Now, I actually work very closely with like Salesforce admins as well as people who deal with ServiceNow at some pretty big healthcare organizations. Because ServiceNow is mainly for like ticketing. They help with like ticketing and reporting for, well, we use it for like order process stuff. So I would look into, I don't know, maybe being a Salesforce admin, something like that. Hey, Mel J is here. Good to see you, Mel. Dirk says, I am in billing for a major tech company. Any job recommendations? Well, do you like where you're at now? Are you looking to make a pivot or move somewhere? Yeah, Dirk says ServiceNow is great for order management. I've been running into some issues though. I don't know, I think if I explain it in detail, it's gonna sort of give too much away, but as it relates to these big telcos, right? Here's the main problem. So a lot of, and just customers in general will have, let's just talk about like in the enterprise space. Let's say if they're managing like regular devices, you're talking about like smartphones, maybe tablets. And let's say if these doctors use like an Epic. Is anybody familiar with Epic? It's sort of like their medical device software that are provisioned on a lot of these devices. Now the ordering process, they want to API into the carrier's, I would say, platform, right? But a lot of the carriers, I think like Verizon and T-Mobile, a lot of them don't have the API integration into like Workday or ServiceNow. So it makes the order process extremely elongated. So by the time you place an order for a device, send it to like an MSP to do the staging, the kitting, provisioning of these devices, install like a Microsoft Intune I've been running into Intune a lot. Has anybody been running into Microsoft Intune? It's like an MDM. Anyway, then download all the apps. It's like a 3-week turnaround, which is just way too long. So I think it would be more seamless if these customers just log on to their dedicated portal and have their employees order their own stuff, as opposed to going through one IT guy and the guy is swamped with all this work. So I don't know, that's sort of some of the things we're working through. But I'm a huge fan of ServiceNow as a company. CEO Bill McDermott, he's a great tech CEO, enterprise software CEO. Bill McDermott has a really, really crazy story. Great CEO.
That's nothing compared to
Sabrina Ferris has agreed. My husband has done that. Yeah, Alex Y, Epic, like an EMR, electronic medical records. Yep. Now, where I think a big area of opportunity is remote patient monitoring. We sort of had a dedicated live stream to that. Now, here's the piece, maybe for anybody who may work in healthcare or something like that. Here's what we need to solve for as, I'm gonna even say as a country. And this is the missing puzzle piece if we want remote patient monitoring to work. You ready? Here's what and again, this is my opinion, but this is what I believe. We know there's a product market fit. We know that. The problem is who's gonna pay for it. So if there is a way where we could prove via very detailed reporting where we could go and show a government or an insurance company and say, these tools, these remote patient monitoring tools that we're deploying in the field right now, it's proven to reduce the hospital remittance rates. So what would you rather pay for? Maybe $40 a month on a subscription-based service to pay for remote patient monitoring services, so you could remind the patient in real time to administer medication, to remind the patient to take their insulin if they're diabetic? Or would you rather pay, $13,000 to $20,000 a night for a hospital bed, right? Because the data is clear. The data shows that the reason why a lot of patients are actually going back to the hospital are not because of major things. It's because of very, very fixable and little things like, I forgot to take my blood pressure medication or something like that. Because a lot of seniors, unfortunately, they live on their own. Some of them can forget things. So if we can deploy technology to monitor in real time and have a primary care physician see all of that data in real time, they can see if something's wrong and maybe send an alert to remind these patients to do those necessary things. And then maybe we would get subsidy for spending on those services. But the missing piece is we just need the reporting to be able to show these insurance companies and governments to say it's worthwhile to spend on this than it is to spend on, $20,000 a night at the hospital. Hey, Noel A. This is, can you show us a map of where you're walking in real time? So I'm actually working on something cool. So to be determined on that. But this is 26th Street and Broadway. Now, this place is always packed. Have you guys ever seen a live stream we've done where this isn't packed? This place is absolutely packed all the time, all day, every day. Dirk's third-party health insurance plans are becoming popular with an emphasis on prevention. All right, team, we are gonna cut it loose because I gotta get the train, but I wanna thank everybody for joining the live stream tonight. I think we covered a lot. It's been a busy week on Wall Street. It's gonna be even busier one next week. So if you guys are new here, feel free to hit the subscribe button. We do these live streams starting at 8:30 at night. We will be live tomorrow at 8:30. If you want to sign up for our free investing newsletter, feel free to scan the QR code on your screen. Every other Tuesday, well, I would say usually every other Tuesday, we put that out, where I write a detailed synopsis on US equity markets, emerging markets, fixed income, and the like. And I want to wish everybody a very happy Friday, a good start to your weekend. Make sure you take this time to get some rest. Sleep is very important, okay? So if you've been working yourself to the bone this week, you've been putting in the hours, make sure you get some sleep this weekend. Take it easy, because you need to recharge, and we need you here on Walks on Wall Street. All right, team, have a great weekend. Everybody stay safe. Steve CR, thank you so much. War Walker, I appreciate you. Brad's Brain. Disney Hatch, thank you from the UK. JR, Vonda Howard, Abdullah, Patrick, New York, Joan, Gary, Dirk, Friendship Lights, Dusty Cole, Penelope, Sabrina Fair, Noel A, Tariq Khan, and to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. We'll see you guys tomorrow. Have a great weekend. Thanks, guys.